What's going on, everyone? Welcome to Decred in Depth. I'm your host, Angelo, and on today's show, we have Ammar Naseer, who is another talented researcher for the DCR project. Ammar, what's going on?
Hey, Angelo. Thank you for having me. I'm doing good.
Of course. So let's cover the basics and your background, since it's your first time on the show.
It is. Thank you. So I come from a traditional finance background. I've been working in banking for the last decade at the intersection of finance and technology for different types of consumer banking products. One of the things that got me into crypto, well, there's many things, along with the get-rich-quick scheme and transparency. I think those are two themes. But I think the ability to think of a store of value of Bitcoin initially. One of my first roles in banking was to look after the distribution of precious metal sales to high net worth clients. So what happens is 2008 crisis. I freshly graduated from undergrad, and one of my first roles was to look after the distribution of bullion. So high net worth clients would come to Canada, and they would buy large amounts of gold, which is primarily bars and coins. And what we would do is we would help them load these big amounts of gold into armored trucks. And they would take these armored trucks and they would go store them in either bank vaults or private custody providers. And what I saw was essentially their interest in storing their wealth in a store of value that is scarce, that is uncorrelated to the stock market, and that could be stored in a way that is outside the reach of authoritarian governments. So, and we would give them a private key, so only the owner of the asset could manage it. So when you think of Bitcoin, when you think of cryptos, so I think a lot of those characteristics really kind of help me understand the initial value. So scarcity, uncorrelation to the stock market, being able to store it in a seizure minimized manner, and managing those assets with the private key. All of those things really helped me understand Bitcoin and crypto in a unique way, I think. I first heard about Bitcoin a long time ago, but I wasn't really thinking that it was going to take off the way it did. I think when 2016, 2017, when the market came and you couldn't help but follow the headlines. I think when we saw the price go up close to $1,000 every single day, 6,000, 7,000, 8,000, 9,000, 10,000. I eventually gave in to FOMO and I bought in. I did buy in at the top and I got wrecked, as I'm sure a lot of people did. So that's when I first got into crypto.
Understood. So now, coming from Toronto, do you think Decred has a special relationship with Canada? And if you do, how so?
I do. I think crypto as a whole in the Toronto space is really growing. I think most people know that Ethereum was founded here by Vitalik in Toronto, but there's a special relationship that Decred has with Toronto and with Canada that is not as well known. Most people know that a lot of the initial work for the technical design for Decred came from this paper called Memcoin 2, which talked about the hybrid proof of work and proof of stake design that is used by Decred today. And it was done by somebody anonymous who only goes by the name of Taco Time. And this Taco Time person also was one of the co-founders for Monero, which is another really, really famous project around privacy. So Taco Time didn't tell too much about themselves, except that he revealed on various occasions that he lived in Toronto. So when you think of Toronto, you've got Ethereum, you've got Decred, and you've got Monero, three of the largest cryptocurrency projects in the world, all having to do something. So that's actually a really interesting aspect, in my opinion. And especially with Decred, when you look at even this show, the first person you had on, Jonathan Jay-Z, he's Canadian. You recently had Zubair Zia on. He lives in Toronto. I live in Toronto as well. So I think, within a small population, to have such a large overlap and interest in Decred is really interesting. And I think there's something about the inclusiveness of Canada and the inclusiveness of the Decred ethos that something lines up really well. And I think we're just getting started. And who knows? I think there's going to be a lot more smarter contributors to come in the years to come.
Interesting. I was actually unaware of that when it came to taco time. So now with all the crypto projects out there, what was it about Decred that you found attractive?
Yeah, I think I first got into Bitcoin, as a lot of people do. I think that's the gateway drug for most people. When I first got into it, though, I think there's a lot of unanswered questions about Bitcoin that even Bitcoiners will admit. When you think about one of them is funding. So when you think of these as long-term new forms of money, you have to understand who's going to fund this. This is a software product. At the end of the day, these are all programmable monies. So who's going to fund this? Not 1 year, 2 year, 10 years from now, but 20, 30, 40, 50 years from now. Who's going to fund these projects? And I think the ability to be a self-funding project where you don't have to rely on money from anybody else was kind of a really differentiator for me for Decred. The other thing that I was still unclear on was around sort of for Bitcoin was around its governance and thinking about longer term how anytime there are difficult decisions that need to be made, I think the way Bitcoin is structured is inevitably it leads to unclarity. And I think that's good in some ways, but it's also bad in many ways in that it creates risks for community fractures. And I think we've already seen that a few times. And that's a risk that's going to come up over and over and over again. So the third thing that I think that really caught my eye was around this concept of security, particularly that there are other ways of having security rather than pure proof of work that can actually make the protocol more secure. So I think security in the blockchain ledger is going to be an aspect that if you can compete on that vector with Bitcoin, so nobody else can do that. If Decred, so Decred has the ability to do that. And Checkmate, or our friend Checkmate, who was on the show earlier, and we love him as an Aussie researcher for the Decred community.
Of course.
Shout out to Checkmate. One of the things that he's already done is shown how Decred, even though it's only 1/700th the size of Bitcoin, it arguably competes at a similar range in terms of the blockchain security, meaning the blockchain ledger is more tamper-proof in some ways longer term than Bitcoin. So today, Bitcoin is obviously way bigger from a market cap perspective, but as Decred scales up, there's going to be inevitably a tipping point when Decred can overtake Bitcoin in blockchain security for its ledger. And that is not something that I think everybody understands. And that is a form of information asymmetry that is certainly not priced into the market. So when people think about the flippening, people think about the market cap usually. But to me, I think the security and the tamper-proof strength of the ledger, that's the real flippening. If a blockchain project, if any cryptocurrency can overtake Bitcoin longer term in terms of its security, that's a factor that I think is not yet priced in. And I think Decred offers that.
Understood. I definitely agree with you on that. That security is definitely the most important attribute to any blockchain project. So let's see. People have said cryptocurrencies are a form of digital free market money. What does that mean to you? And explain your interpretation.
Yeah, certainly. I think we're living through a time where money is increasingly being digitized as a society. We're going more and more cashless. And also at the same time, what we're seeing is money is being decoupled from traditional institutions which created money. And we're going more into what you would call supranational currencies. So the economists, and this is not a net new concept, the concept of supranational currencies where money can go across borders. I think if you look at The Economist, the magazine, I think if you pick up the 1988 version, one of them actually talked about the rise of world currencies. So these are not new millennial inventions. I think these concepts have been around from before even. And so even John Maynard Keynes, one of the major economists, who was kind of the architect of the current financial system, even they acknowledge that supranational currencies will eventually be around. What we're seeing with digital free market money is that what I mean by that is money, even though it's going digital, it's right now it's still backed by traditional fiat institutions. But as you look at sort of the horizon, slowly we're seeing stable coins, which are still synthetic versions of traditional money. Then you're starting to see providers like Libra, I think it will eventually launch. That's going to be a basket of different currencies. Then you start to see currencies like Bitcoin, Zcash, Decred, which are actually no longer backed or dependent on traditional institutions. So you're seeing on the one axis, money going from physical to digital, and on another axis, you're actually already starting to see money going from being reliant on local national governments to being more free market. And the concept of private monies is something that Nobel laureates like Friedrich Hayek have theorized about for a long time, where privately issued monies can actually compete alongside publicly issued money. And so people would be able to choose from different types of money, not just based on their geographic origins like we do today, but also based on its different features. So just like we choose different products along different features, you choose different cars, or you choose different languages, you choose different religions, you choose them on different characteristics and values and features. We'll be able to do the same with money.
Now, Decred retains Bitcoin scarcity at 21 million and expands the applications further. As a whole, do you want to unpack that and how you view that?
Yeah, I think something to do with this. And the last question is, I think the concept of there's something economists talk about, which is the concept of the Treffen Dilemma, which is world reserve currencies have this inherent dilemma. It's a paradox. And I think Decred addresses that paradox better than any other cryptocurrencies. It's something I'll be writing about in the coming months too, which is how Decred can actually be a better alternative in terms of being a world reserve currency than even Bitcoin alongside any other currencies. So the Treffen Dilemma is essentially a conflict of interest between domestic policies and the international order for any currency that is a reserve currency. So what I mean by that is if you have the reserve currency of the day, so which is the US dollar today, it used to be the British pound before that, used to be the franc before that, used to be the Portuguese government before that, used to be the Dutch government before that. So what happens is whenever you have the incumbent reserve currency, your currency tends to be the standard. So you have to make your currency almost strong and stable in order to retain that. And that comes with certain powers. But as part of making your currency the strongest currency, what that ends up doing is your products become more expensive relative to other currencies, which are actually devalued. They're actually a lot cheaper. So what that does is it makes your exports for all of the goods created in your country more expensive. And over the long term, what that does is it can end up creating deficits from a trade perspective, because if you try to import stuff, it's just more expensive than from other countries. It's just not as competitive. So what ends up happening is over the longer term, even countries that have the incumbent reserve currencies, they tend to devalue their currency. And this is not net new with the US dollar. The US dollar, you read the current administration, they're actively trying to devalue their currency, and you can see that. But it's not something just new in today's world. You go back all the way to the Roman times, and you look at the denaro at the time, and you chart it over 200 years. And what you see is slowly how the denaro lost its share in silver coins at the time. And then you take that chart, and then you overlay that with the chart of the US dollar, which is the strongest currency for the last 100 years. And what you can see is it's almost identical. Just like the denaro slowly went down in terms of its share of value, The US dollar is doing the same. So if you had a US dollar from about 100 years ago, I think its purchasing power that's left is close to 5 cents or so. So over time, they all tend to lose their value. And there's been different solutions for this that have been proposed over time. One of them is to say, hey, maybe instead of relying on a country's currency, we can think of a return to a more of a modern gold standard. So I think proponents of that actually tend to fall under the Bitcoin bucket, where it's kind of like a gold standard. It's not really, issued by any one particular person. There's no control. It's sort of very, very apolitical. The other solution that isn't yet talked about enough, but I think it should be looked at more because economists already understand it, is the concept of a supranational currency which provides some governance rights. So if you look at the International Monetary Fund, the IMF, they have already a currency. It's a synthetic currency called the Special Drawing Rights, or SDR. Their ticker is XDR if you're interested in looking at it. And what that does is that currency, it's used for the accounting purposes of the IMF today. And what that currency does is it facilitates monetary cooperation and growth for its members. Unlike the General Assembly of the United Nations, where each country has one vote, one person, one vote, the IMF decision making is done on a quota-based system. So whoever buys into SDR, they get governance rights in accordance with that. The SDR also provides interest rates. So when you think of the SDR as a currency, which is already understood by all of the major countries in the world, it's a new form of money, which it functions as sort of like an accounting ledger between countries. It also provides interest rates like recurring cash flow, and it also provides governance rights. So those characteristics are exactly the characteristics that we can see in Decred. That's not something that I think has been explored enough. And so I'll be writing about it a little bit more, but I think it's something the Decred community needs to explore a bit more, because I think this positions Decred as a unique contender in the entire cryptocurrency space. And it's a concept that's already well understood by economists around the world. I think when you think of reserve currencies, there's a certain amount of seniority that comes with being an incumbent reserve currency. I think they won't just want to let go of their reserve currency status too. But if you tell them that you can retain some influence, some monetary power, and you can continue to get some cash flow and things like that, I think that gives a new bridge for people to start thinking of cryptocurrencies as reserve currencies. The other thing, to your point about expanding the application of cryptocurrencies, is cryptocurrencies are too unstable still. So nobody's buying coffee with cryptocurrencies yet, right? They're still collectibles. They're not stores of value yet. They're really not effective uses of mediums of exchange even. You look at Bitcoin, you look at Decred, they're deflationary in nature. So unlike the US dollar and other currencies, which are inflationary in nature, which encourage you to actually consume money. So the thing that I really like about Decred is, rather than the traditional approach for cryptocurrencies, which is, I call it the hodl and hope strategy, which is you hodl and hope that, the rest of the world burns down. Decred is actually looking at building a better house and saying, we're going to build a network, and we're going to use DCR as a currency from inside the network. We're going to pay our contractors in this particular currency. We're going to try to create all economic value, and we're going to all types of economic coordination based around this currency. We're going to build an exchange so that other cryptocurrencies can easily be directly compatible with this cryptocurrency of DCR. So that's sort of like a feature, which is what I would call a saleable feature of money, which is, you can easily exchange one thing to another. That's a unique feature that Decred is building. That's a unique approach. The other thing Decred also has is Politeia as a voting solution, which you can use Decred to show your skin in the game. So the ability to actually say that you can vote for things with your wallet, literally, and actually, Decred is the token that underlies all types of voting. It shows your way of your skin in the game. I think those are really interesting and differentiated features that nobody else in the entire cryptocurrency space is doing. People are starting to really look at it as a thought leader. Um, I'm a big believer in in the blue ocean strategy, which is you need to innovate not just in sort of a zero sum game, but you need to go beyond where everybody else is competing, compete in new vectors. That's where there's the most opportunity to win minds and shares of wallet. Um, One other thing that I think that's unexplored also, I think over the longer term, is the ability to, when you start to conceptualize from a product perspective, you have DCR timestamping, which is sort of like timestamping on the digital blockchain ledger. When you combine timestamping with money, what kind of concepts can you create? Because I think we tend to think that we're going to create cryptocurrencies in the same way that traditional money has been. But I think if money and cryptocurrencies are a ledger, you can start to think of it in many other ways. One example is this: when you think of receipts, what are receipts? Receipts are proof of purchase. So whenever you buy something, I think if you have a receipt, rather than issuing a traditional receipt that that can get lost or emailed, that can get deleted, or stored in a central database that can get tampered with. What if there's what if a receipt is essentially, if you think of it as an exchange of money and also a timestamp on a ledger that says this is a proof of an economic activity. So if somebody were to buy the Mona Lisa, for example, if the Mona Lisa changes hands, you could pay for it with money, and also that transaction is a proof of purchase, a proof of economic activity that can be timestamped on a ledger. That's something that's extremely unique, and that's only possible with cryptocurrencies, not with traditional money. The other thing that I think is also loyalty. When you think of loyalty cards, what are loyalty cards when you look at Starbucks or whatever your favorite loyalty company is? What it is basically a proof of various purchases in the past. So what you can do is, if you could think of it where if you have multiple transactions that are guaranteed to be provable, all you need to do is you give some permission to somebody to say, look, I conducted the past 4 or 5 of these transactions, and you can selectively share that data about the blockchain, about those particular transactions, and you can get eligible for different rewards, and those rewards could even be denominated in Decred or DCR. So I think those are really the new types of design space things that we can think about with Decred as a cryptocurrency that are not possible with traditional money, and not even with other types of cryptocurrencies.
So now, digging into your work a little bit more, into the papers that you've published on Medium, what are tokenomics, and how are they blending technology and economics together?
Yes, certainly. They're also used as crypto economics. The term, I prefer the term tokenomics because of the focus on the word token as opposed to the cryptography. So really, tokenomics are behavioral incentives used to incentivize the use of digital tokens as economic assets. In a way, it's to think about the business model of cryptocurrencies. So cryptocurrencies aren't like traditional companies which are going to go public. Instead, what you want to think about is, you want to think about how you can use blockchain technology to create digital tokens which are highly secure, and you can create behavioral incentives so people can actually start to think of them as economic assets, both to store their value and to use them in day-to-day consumption. I think when you think of cryptocurrencies, it's not like creating a new version of PayPal. It's creating a new version of money. I think when you think of it from that perspective, tokenomics and I think behavioral economics becomes really, really important.
Now, can you compare the different tokenomics of BTC, ETH, and say DCR?
Yes, certainly. I think to start with, we should acknowledge that these are all programmable money. So if you think of the word programmable money, Ethereum tends to focus on being more programmable. And I think Decred and Bitcoin are closer in the sense that they focus on being money. I think if you really think of an analogy that I like to think through is if you compare Bitcoin and Ethereum, think of it as a tree where if if there's a tree, Bitcoin focuses on having the strongest and most unchangeable roots. It's going to be around for a long time. It's really hard to move this tree. It's just going to be there. Versus Ethereum focuses not on the roots of the tree, but it focuses on having the tallest tree. So focusing on trying to make sure that it can just be building on top, and it's trying to go as high as possible, encouraging trying to have more and more people trying to build on top of that. So I think that's an analogy. I think that when you think about that, I think Decred kind of leverages from both, and it learns from both. It takes the economic properties of Bitcoin, but it also has a lot more money and a lot more incentives for other people to build on top of to scale the network out. One of the things that I like to read is Peter Thiel. He's written this book called Zero to One. One of the things he talked about was try to if you can identify an opportunity for monopolistic use of something, then monopolies tend to accrue an unfair proportion of value. So Bitcoin tends to be the BTC tends to be the sort of the monopoly of the Bitcoin network. So Bitcoin accrues all of the value in the Bitcoin network. When you look at ETH, for example, if you look at their token, ETH is not the only token. ETH kind of helps, Ethereum helps other people launch their own tokens on top of the Ethereum network as well. I think that helps scale the network. I think it helps attract a lot of people in it. But what it also does is the economic value of the entire Ethereum community or the entire Ethereum blockchain is not going to get captured by the ETH token. So in some ways, the way I like to think about it is ETH is like gas for an Ethereum car, but the car can also run on alternate forms of energy. So you want to make sure, you're not the only share, you can't easily be replaced by another token. So if you have middlemen coming in and launching their own tokens, which don't necessarily require the ETH token, some of the value will not transfer over. So I think the ability to be disintermediated is something that I think from an economic perspective is a risk or is a drawback of the Ethereum token design. When you think of tokenomics, one of the properties of tokens that's starting to become really popular is the ability for tokens to give some sort of cash flow. So Bitcoin doesn't actually give cash flow returns. In traditional finance, there's many institutions that will only invest in assets that provide some sort of, consistent cash flow return. Bitcoin doesn't do that. So what people are starting to do increasingly is to actually lend their tokens to centralized parties like BlockFi and a bunch of others, which end up giving you recurring cash flows. So, but it's so ironic in the sense that Bitcoin is supposed to be self-sovereign money, and you're trying to minimize seizure-proof aspects, but people are actually saying, we don't care about the sovereign part. We don't care about, minimizing risk of seizure. We'll hand it over to centralized parties, and in all in exchange for some cash flow. So already we're starting to see the need for cash flow as a characteristic be there in tokens. That's not in Ethereum, and that property is also not in Bitcoin. The other thing that when you look at the Ethereum ecosystem is you're starting to see tokens that give some sort of governance rights starting to accrue a lot of value. So tokens like 0x, tokens like Maker, MKR, they're starting to become really, really valuable. I think they're in the top 30 now. And so when you look at all of that and you look at Decred, is following the Bitcoin model where, all of the economic activity can be captured under a single token. It provides you with cash flow returns. It provides you with governance rights. That makes it really unique in a way. I think in 2017, ETH accrued a lot of value by helping people launch ICOs. In 2019, BNB token, the Binance token, rallied because people used it to launch IEOs. But I think in the future, the DCR token will also accrue value because it's going to be used by people to launch their own DAOs. So Decred is a DAO provider potentially as an infrastructure provider for the entire cryptocurrency community. So DAOs are essentially networks that can be created on the blockchain. So they're not incorporated in physical jurisdictions. They're essentially incorporated on a synthetic version of a blockchain. So instead of having a traditional LLC, you can have a DAO that lives and breathes on the blockchain. So Decred can be the infrastructure provider for that. And if being an infrastructure provider helps create a monetary premium, and as the market has shown in the past, then that bodes really well for Decred.
You said in some of your work that Decred is an innovation in monetary economics. You care to explain?
Yeah, certainly. So we tend to think of traditionally, I think everybody's covered, money has different properties of, being a store of value, medium of exchange, and a unit of account. So store of value where, you can retain your value in it. Medium of exchange, meaning, you can use it on a day-to-day basis to pay for coffee and things like that. And unit of account, finally, is where you actually start to price things into a particular currency where, you can pay for it with $1 of, when you quote for things, you actually quote for it. How many dollars is something? So that's the final version of unit of account. Another way to think of cryptocurrencies, though, is this really famous paper that came out in 1997 by Robert Greer. It looked at it as an asset class. What it says is it takes a look at all assets across the world and says, are there super classes of assets? And essentially, he looked at it and said, I think assets can be stored, assets can be categorized either as stores of values, consumable, transformable assets, and then capital assets. And I'll explain what that means. Store of value assets are traditionally assets which have some sort of economic scarcity. So gold or real estate are examples of store of value assets. Real estate is the world's biggest store of value asset, being worth more than 200 trillion today. Consumable, transformable assets are assets which help facilitate commerce. So when you look at fiat currencies or gift cards, they help facilitate commerce. So it's some sort of utilization function that they provide. So that's what sort of medium of exchange do also. And I think the third category that he talked about was capital assets, which is essentially some sort of productive assets which provide some sort of ongoing decision rights or cash flow rights. So when you look at stocks, bonds, income generating real estate, so they all provide some sort of recurring power, cash flow, some sort of return. Decred is unique. And then even Bitcoin in some ways. And one of them is this. So if you look at gold, gold is a traditional store of value asset. If you look at Bitcoin is, it's a store of value and it can be a medium of exchange over the long term because of how divisible it is. With Decred, it also extends this to become a productive asset. So in the sense that it's got cash flow and decision-making rights. So if you look at it as a gradient, you've got gold doing some function, Bitcoin doing some function that gold does, and then plus doing new functions. And then you've got Decred, which is doing what Bitcoin can do, and then some functions plus. So I think that's a really, really unique economic attribute of Decred that nobody else in the cryptocurrency space has.
Now, you've also written that Decred is building a war chest. What does this look like?
Yeah, I think a war chest. I think I may have gone a little bit hyperbolic with that terminology, but but I do think that Decred is building a really really um, important treasury chest, um, and I did some analysis to show that it's going to be worth billions of dollars in the future. Specifically, so the way Decred works is every 5 minutes, so as this new DCR are mined, 10% of some value of the new DCRs actually go towards this treasury chest. And that treasury is used to fund the entire ecosystem around Decred. So that treasury is worth anywhere between 10 million to 20 million, depending on the price of Decred over the last year or so. But as you try to think about, as new Decred continue to get mined, as the price of Decred continues to grow up over the longer term. And by the way, I think when you look at the stock to flow ratio of Bitcoin, which has helped kind of foretell a lot of its price, Decred is actually mirroring that, and it's actually doing better than Bitcoin even in terms of retaining its monetary premium to its stock to flow ratio. So if you can take a look at that, you can try to project out, a decade from now, if you try to model a value of a price of Decred, um, then you try to reflect that in the value of the treasury chest. Then you can say, okay, we would have drawn down some value from the treasury over time to try to fund the ecosystem. Maybe it's 30%, maybe it's 40%, maybe it's half of all Decred value that goes into the treasury chest gets allocated to the network and to the community for upgrades. Even then, it's going to be worth a multi-billion dollars worth, in my opinion. And I think that'll be a really, really big differentiator over the long term. So the ability to be self-sustaining, where you don't have to rely on anybody else for fundraising indefinitely, potentially, is something that's not priced into the market yet.
Ammar, you claim that there's financial premium for security. Care to explain?
Yeah, for sure. I'll maybe give a little story that I haven't really shared with anyone in crypto before. So my grandma, she lived in what is now Pakistan. She used to tell me a story when I was growing up. It was around the fact that money and anxiety, how they're so closely tied together. And if anybody can address anxiety, they tend to get everybody's money. So at the time, the financial system wasn't that great. So people used to store their money inside mattresses and walls and things like that. Then safes came along, and people said, hey, you know what, we're going to buy safes. We're going to buy the best quality safe so that our money is going to be safe within that. Then banks started to become more and more popular, and people started to line up along the block to the banks that actually said they have the strongest vaults. So inherently, the ability to address the financial need is actually something, the address or risk is something that has a monetary premium. So at a micro level, this is why people bank with the most safest banks, the most trustworthy banks. At a macro level, it's also why countries at the macro level store their currency in the most stable currency of the world, or which generally is the country with the most amount of weapons, because they can safeguard their money. So the ability for Decred's design to have potentially one day the world's most secure blockchain ledger has a financial premium. I think when you look at from a banking industry, when you think of financial anxiety and uncertainty, the analysis that I did was when you look at lending, there's variable rates and then there's fixed rates. When people have variable rates, there's some uncertainty because interest rates could go up or down. Those variable rates are generally speaking cheaper. And history has shown that, people will be better off 95% of the time, buying a variable interest rate. But then what people end up doing is, instead of choosing the variable interest rate with some risk, people tend to go with fixed interest rates, for when they buy mortgages and whenever they get lending products. Even though fixed interest rates are more expensive, but they're just predictable. They tend to give a sense of financial security. So people will actually be willing to pay for financial security. And I think that's something that I think will inevitably get reflected into the network valuation as well.
Interesting. So, Ammar, thank you for coming on the show. Do you have any closing thoughts or message to potential stakeholders?
I do. I think there's a couple of things. One of them is for people who are just still learning about Decred. Bitcoin is already worth 100 billion plus today. Think about what are the multiples that it can grow in. Can it go 10x, 20x, 50x from here? That would make it, really expensive. But Decred only needs to grow. Decred has essentially a longer runway for it to grow. So purely from a greed perspective for myself and for many people else, when you look at the multiples that Decred can easily grow, it's a lot easier for it to go, let's just say, in multiples rather than the Decred, rather than Bitcoin and others. It's just, it's worth so little today that it can grow so much faster, and not just theoretically, but I think already it's doing things that cryptocurrencies aren't doing in many other ways. One of which is going to be around its network effect, specifically the way Decred addresses switching costs. So if Decred and other cryptocurrencies are all about network effects, I think Decred has the money to attract more and more people into its network as financial contributors. I think that's going to be a really good way for it to grow its network effect that other people don't necessarily have in the same way. I think Decred also has what you would call switching costs, which are highly important over the long term in order to retain your network effect. So when you look at something like an Uber or a Lyft, I have Uber and Lyft both in my phone. Do you?
Yes, I have both.
Why do you have both?
Options, of course. Sometimes the rates are different. Is you have variety.
Interesting, right? So one of the key reasons is because they haven't solved for loyalty yet, right? They haven't solved for switching costs yet. What Decred has already done is it's solved for switching costs. So when you try to if you require to sell your Decred, i.e. abandon the Decred network to go towards a competitor, you're going to have to forego your access to the Decred Treasury. You're going to have to forego your voting rights. You're going to have to forego your access to any recurring cash flow that you can get from Decred. So those are all additional switching costs on top of just the selling part of the token itself. So I think the ability to create some sort of loyalty incentive is something that bodes really well for network effects over the long term, and I think that will be one of the differentiators for the Decred community.
Well, thank you so much for your time and for coming on the show, Ammar. Appreciate it. Looking forward to the new papers.
Thank you. I really appreciate it.